Hello, this is Doug Fabian. Welcome to my weekly ETF report. Today is Thursday, December 4th, 2014. Thank you for joining me today. As always, three things to talk about in relationship to the world of exchange-traded funds and your money. As you can see, I'm broadcasting from my ETFU.com studios, and if you haven't done so already, I want to encourage you to get out to ETFU.com. We've got a lot of tools for ETF investors. My video series is coming along. I'm doing a weekly podcast that I'm very excited about. I'm really in education mode as far as exchange trade investing is concerned. Now let's talk about what's going on in the financial markets right now. And as we're closing out 2014, I really believe it's going to be important for you to look at all of your assets. I'm encouraging you to get more money invested in exchange-traded funds in the new year. But what I really want you to look at is the amount of money you have invested internationally versus domestically. And I have a hunch, I have a belief that next year in 2015, international markets are going to do better than U.S. markets. And one of the reasons why is because the US dollar is experiencing a strong uptrend. And you might think, great, US dollar going up has got to be good for me. My life is in US dollars. But one of the things that a strong currency does to multinational corporations is it makes their products and services more expensive overseas. So I'm expecting a little bit of a headwind for the US stock market next year with this strong US dollar. And I'm also expecting a lot of countries that have been lagging in terms of investment performance to start to pick up in terms of their investment catching up to the US markets. Now, I want to tell you today about a new type of exchange-traded fund. And it may be new to you. These ETFs have been around for several years. It's called a hedged currency ETF. And what it means is when you invest inside of another country like Japan and their currency goes down in value, it doesn't really help you from an investment standpoint. So if you could take out the currency risk, the fact that the currency is going down, you'll have much better investment performance. Case in point, we have the ticker symbol EWJ. It's the iShares Japan ETF. So far in calendar year 2014, this exchange-traded fund is down 3%. But if we look at a hedged currency counterpart, DXJ, which is the Wisdom Tree Japan Hedged Currency Fund, this ETF is up 12%. So would you rather be down 3% or up 12%? I know the answer. You would want to be up 12%. So these hedged currency products are new and now available in a variety of different currencies. I've just introducing them into successful ETF investing in terms of European investing, because the euro has been going down, and Japan, because Japan is going down. So I wanted to share this new concept with you. And this is a concept that you cannot get in a mutual fund. Again, one of the advantages of exchange-traded funds is they have very innovative structures and products. Now, I want to move on to another country overseas, and you've heard me talk about it before, but there is huge news on the global economy today, and it is the fact that the IMF just came out with numbers that showing the Chinese economy is now larger than the US economy. The United States is no longer number one in terms of economic size. China is now number one. China is overtaking the US economy. That's unbelievable. You can read the story today out at marketwatch.com, and there's going to be, of course, a lot of news about this in the weeks, months, and years ahead. But if you've been watching my videos for the past several months, I've been talking about China. And now I want to show you a chart of the Shanghai Composite. This is the equivalent of the S&P 500 for Chinese stocks. And the time frame that I'm sharing with you for the Shanghai Composite is 10 years. And you can see from this chart that in 2006 and 2007, the Shanghai stock market was on a rocket ship ride. It was up, I believe the numbers were up over 100% in those 2 calendar years. But since that time, you can also see that the Shanghai composite came down in the collapse of the global economy in 2008. It rallied a bit, but it's really been meandering sideways. And in the last 3 years, prior to 2014, it's been in a bear market. Now we've seen this market turn. And if you look at just calendar year 2014, you might think that, oh man, this market's gone up too much. I don't want to invest in this market. But if you look at it on a long-term basis, you can see that there's still plenty of potential for China in the future. Now, I just reviewed the numbers, and there are over 29 exchange-traded funds available for investors to give you exposure to the Chinese stock market. Now, in successful ETF investing, we have been fortunate that we've been on this trend for the past several months. So we are invested in Chinese ETFs right now. But I want to encourage you to get involved in China because I think it could be one of the top performing stock markets globally in 2015. Now, if you need help with your investing endeavors as it relates to exchange traded funds, I would encourage you to become a subscriber to Successful ETF Investing. And here is a special offer from my publisher. This is Doug Fabian. Hope you're having a great holiday season. I'll be back at you again next week. Thanks for tuning in.